The reasons Swiss banks attract black money, a comprehensive examination of controversy, wealth and secrecy. The term Swiss bank account frequently evokes images of concealed fortunes, shadowy figures, and suitcases of currency that are shielded from prying eyes. Swiss banks have been a preferred destination for black money for decades, which is wealth that is either undeclared or unaccounted for. This wealth is frequently associated with illicit activities, tax evasion, or political malfeasance. However, what is the reason for the attraction of such funds to Swiss banks? The reasons are derived from Switzerland's history, stringent financial privacy laws, and distinctive banking practices. This video will explore the reasons for Swiss banks' attraction to illicit money, the ethical and legal concerns it raises, and the recent modifications to Swiss banking policies in response to global pressures. The history of Swiss banking secrecy. The banking secrecy of Switzerland can be traced back to the early 18th century. For centuries, Swiss banks established a reputation for offering secure, private financial services to individuals throughout Europe. The Swiss banking law of 1934, which was enacted in the 1930s, formalised this reputation in Swiss law. This legislation prohibited banks from disclosing the identities of their clients without their consent, and it imposed severe penalties, such as imprisonment, for any violations. This law was partially a response to Nazi Germany's threats to compel Swiss banks to disclose the accounts of Jewish clients. However, it also solidified Switzerland's reputation as a secure refuge for affluent individuals seeking discretion. Wealthy individuals, legislators, and corporations seeking a secure location to conceal undeclared or unaccounted wealth were attracted to this strict adherence to client confidentiality over time. A refuge from governmental scrutiny was provided by Swiss institutions, which attracted funds that were otherwise difficult to account for, what many refer to as black money. Swiss banks are particularly enticing to individuals seeking to launder money due to a variety of factors. Allures regarding confidentiality. Client confidentiality has consistently served as the foundation of Switzerland's banking sector. This degree of secrecy rendered it nearly impossible for other nations to ascertain the identities of individuals who maintained Swiss bank accounts or to monitor unreported funds. For economic neutrality and political stability, Switzerland is recognised for its political neutrality and stability, as it maintained its neutrality during significant conflicts such as World War I and World War II. Wealthy individuals are attracted to the Swiss banking system because they perceive it as being immune to political unrest or economic turbulence that could potentially impact other banking sectors. See low risk of penalties and tax benefits. In contrast, Switzerland provided a tax haven for foreigners, encouraging both legal and illicit deposits, while many countries tax wealth and interest earned on it. D. Wealth management. Professionalism and expertise. Swiss institutions have established a reputation for providing exceptional wealth management services. High net worth individuals and corporations have been attracted to Swiss banks due to their reputation for their rigorous financial processes, which are designed to manage substantial quantities of money in a professional and discreet manner. Swiss banks are the preferred option for private and discreet financial services due to their elite reputation. A foreign investor non-disclosure norms. Swiss banks have historically been recognised for their leniency in requiring foreign clients to verify the legitimacy of their funds. Foreign clients may frequently circumvent this surveillance, whereas domestic clients are obligated to furnish comprehensive information regarding the source of their funds. This facilitated the transfer of unaccounted wealth from various regions around the globe to Swiss financial institutions. The worldwide ethical and legal debates regarding tax evasion, money laundering, and global financial parity have been exacerbated by the association of Swiss banks with black money. A global inequality and tax evasion. Wealthy individuals or corporations frequently evade taxes that finance public infrastructure, healthcare, and education by concealing assets in Swiss accounts. This avoidance can result in significant deficits in public budgets, which can exacerbate social and economic inequality in countries that depend on tax revenue to fund public services. For criminal activity and money laundering. The secrecy of Swiss banks has occasionally rendered them appealing to criminal organisations in addition to tax evaders. Swiss banks have been employed by terrorist organisations, drug cartels, and corrupt politicians to conceal illicit wealth or launder money. The refusal of Swiss banks to share account information has indirectly enabled illegal activities, which has fueled international frustration. C. Erosion of national sovereignty. Countries that are unable to retrieve information regarding their citizens' Swiss bank holdings are subject to a form of sovereignty erosion, as they are unable to enforce national laws and taxes. The efficacy of national enforcement agencies is compromised, and financial supervision in other countries is weakened as a result of Swiss bank accounts that contain black money. The erosion of Swiss banking secrecy and global pressure. However, in recent years, Swiss institutions have faced escalating international pressure to combat tax evasion and black money. International organisations such as the European Union and the Organisation for Economic Cooperation and Development (OECD) have encouraged Switzerland to align its policies with international transparency standards as global economies become more interconnected. These modifications indicate a more extensive transition to financial transparency, which is intended to address illicit activities and tax evasion. Automatic information exchange and bilateral agreements. Switzerland has executed numerous bilateral agreements to facilitate the exchange of financial information with other nations. These agreements represent a substantial departure from the traditional Swiss secrecy policy, enabling countries to investigate undeclared assets held in Swiss institutions by their citizens. B. Penalties and legal action. Swiss banks have been further compelled to cooperate due to high-profile legal cases. In recent years, several of the world's largest banks, such as Credit Suisse and UBS, have been fined billions for their involvement in assisting foreign clients in evading taxation. Swiss institutions have been compelled to increase their compliance with international financial regulations as a result of these penalties. C. Due diligence practices and internal reforms. Additionally, Swiss banks have instituted more stringent due diligence protocols for both new and existing accounts. Currently, they are more inclined to require evidence of the legitimacy of funds, which complicates the process of depositing illicit funds without scrutiny. Stricter internal policies are now in place to identify and reject funds that are suspected to be illicit, and Swiss institutions are now held accountable for preventing illegal financial activity. Effect of changing regulations on black money. The allure of Swiss banks for black money holders has been substantially reduced as a consequence of these changes. The era of absolute secrecy has largely concluded, and foreign individuals now encounter greater challenges in concealing unaccounted wealth in Swiss banks, even though Switzerland remains a financial centre. This change has resulted in Switzerland's status as the premier destination for black money declining, as a portion of it has relocated to other jurisdictions with less stringent regulations, such as Caribbean nations or Southeast Asian financial centres. The future of financial transparency and Swiss banks. The term Swiss bank account may no longer be used to refer to complete secrecy. However, Switzerland continues to be a significant force in the global financial sector. Switzerland's financial institutions have entered a new era as a result of the gradual dismantling of banking secrecy. They are now transitioning to compliance and transparency as part of a global movement against financial opacity. The Swiss banking industry has evolved, with a concentration on ethical wealth management, innovative financial products, and rigorous anti-money laundering protocols, even though their appeal to black money may have diminished. The global demand for accountability, fairness, and the ethical management of wealth, values that the world is increasingly insisting upon in the era of interconnected finance, is reflected in the transition of Swiss banks from secrecy to transparency. Ultimately, Switzerland's reputation for stability and professionalism endures, establishing it as a leader in a new, more transparent chapter of global finance, despite the fact that its legacy of financial secrecy is vanishing. Don't forget to like, subscribe, and leave a comment below. We'd love to hear your thoughts on this topic.